Hey you guys, welcome back to another Impact FX video. In today's lecture, guys, we are going to be discussing a question that came up in the community post. Now, over the next couple weeks, I will be answering more of your guys' questions. Now, what I've realized though is everyone is complaining about entries. I find it interesting because, I've given you guys so much information around entries. I think the problem is that people are literally not understanding market direction, market mitigation, and so they're just entering in the wrong areas. Your entries probably aren't the issue. The issue is that you don't know where price is going. You still haven't understood how price mitigates, okay? And you don't have a rule set. I guarantee you, no rule set. Most people, guys, who are failing or are not doing well in their trading journey have not figured out a fundamental pattern of rules for themselves on market mitigation. They just take entries anywhere they want, okay? So we're going to talk about this question or this answer to my question in the community post. So this was posted. It says, entries and true market direction are still tough one for me. My entries are too early or too late, causing higher risk or even stopping out. Market direction on a live market can sometimes get tricky if a lower high fails to create a lower low. Does it mean it'll get run, or do we continue looking for shorts? This question to me instantly screams that you have not created your own system. You don't have rules for invalidation. You don't have rules for market mitigation and what that means for you. All right. So we're going to be going over how to go from a higher time frame to a lower time frame and how to actually find and pinpoint high probable zones to the left and flow with the order flow and block flow as it's being presented, depending on when you get to the charts, guys. So this is what we have to understand. Depending on when we get to the charts, folks, is going to determine the cycle we're trading. Are we trading a mitigation counter trend cycle because the higher time frame has shifted? Or are we going to be trading a pro trend cycle because that is currently what is being played out? Now, in this video, guys, you guys are going to get a sneak peek at 2 weeks worth of weekly trade analysis outlook. Okay, so every week I send to the group a weekly outlook on my projection of price, and I will show you what we projected over the last 2 weeks in EU and what has taken place, and it will start to help you understand how to frame your higher time frame bias so that you can get on the right side of the market and have a clear direction. You can have a clear outlook of what needs to take place so that you can then form your POIs for the week. This is very important. If you don't have an outlook and you don't have a bias, then where the heck do you enter? How do you know if it's selling or buying? What you don't know, you'll never know. You'll just be guessing at the direction, and half the time you're going to get the direction wrong, and then it comes down to psychology and how you mismanaged or managed those positions. Okay? So let's get into a sample of what we did 2 weeks ago on EU. Okay, so again, I'm looking for a structural break. We did see a structural break here. This area didn't have a full mitigation. Feel like we could come up a little higher, which would create a UTAD. Like, my thought process, guys, here is that, let me just go to the 1 hour. We're starting to range. I would be very surprised if this is a reaccumulation range. So I would anticipate a redistribution. If that's the case, we could still see upside mitigation, sweep the low, sweep the high for that. Okay, so you saw what I projected. Now, as the call went on, we went back and redefined the zones that we were looking for price to move off. Okay, now you have to understand, guys, is that the Forex market moves the same way all the time. Okay, so it's looking for origin changes. I've talked to you guys about this on the YouTube channel. Okay, so where does price go from bullish to bearish, right? You have your change of order flow, you have your change of direction. It's a change of character. So this zone was an area of interest for us from here to here based on the order flow delivery of price. All right. Now, if we go back, what you saw projected in that screenshot was a distribution. And in order for a distribution to take place, you have to see sweeps of a low, sweeps of a high, and then change of order flow, right? So we projected that this is the start of the end of the week. we projected we'd see a sweep of the low, we'd come back up, and then redistribute to the downside. All the way down to this zone here was the first target based on a demand level. Now, obviously, this is an EQ zone, so the rest of the projection can be all the way down to here, right? So what took place? As you can clearly see, that's exactly what took place, okay? This is very important for you guys to master the skill of understanding what can take place in higher time frame supply and demand zones. And as you can see, this was a higher time frame supply zone looking for then a new mitigation to the downside. All right, let's go into the projection from last week. This could do that to that, right? From a Monday, Tuesday type perspective, like Monday could put in the high, we could then head down, and then maybe we get a wick back up, or we just hold this block flow. Whoops, sorry. Or we hold this block flow, continue down with a accumulation, and then a potential next expansion. Okay, so let's look at what took place as price came into here. So let's go to the next end of the week, which was right here. All right, so let's play this out. Okay, so this is where we ended up leaving off the week. And as you guys saw, the projection was a continuation to the downside, either into this flip zone, or we're going to hold block flow and just go down. Okay, so let's look at now where we are at in price. What took place? We held block flow, and we have come back down to our zone that we were looking now for buys. So really nice sells down into this zone, and then I was projecting a reaccumulation or accumulation to the upside. These are my trades for the week. There's some other ones in here for a few losses and some BEs that you can't see because this is the 15-minute time frame. And as you guys know, I trade the 15-minute time frame using the second chart. So today, this trade has secured me 6RR plus a runner. And this trade is currently running, as the group currently can see. And I have taken a short off this supply zone all the way for mitigation because we also don't have any wicks to the downside. So a rebalance and a continuation is probable. Okay. Now, with what I teach you guys and what I teach in the mentorship group, these trades are very easy to read. Okay, I'm sorry, but like if people don't believe me, you just have to keep studying the charts. These trades, guys, project themselves if you understand how mitigation in the Forex market works. Okay, so with that being said, we now have a framework, guys, that you guys will have to learn. Okay, this is part of your journey, is how to understand where price is going. Now, once you get a framework for that, we can start to work on your entries and how you actually enter price. So let's dive in to some examples of what you guys can start doing as price is mitigating. Okay, so let's review the question one more time. He's having issues with entries, true market direction, and he's still figuring out whether or not he's too early or he's entering too late. And then he's wondering whether or not the market direction on a live market, it's tricky. Basically, he can't figure out live market direction, and then he's wondering whether or not, if a lower high fails to create a lower low, does it mean it will get run, or should I continue to look for shorts? So we have to create a framework, guys. We have to create a framework for how price moves. It's always the same. So for instance, if price, guys, is making a reaccumulation and then we break structure, so we've swept a high and then we break structure, well, we have to remember the ranges that we're playing in. You're playing in from this lower high to this lower low. If price keeps going, then the range expands, right? However, if price starts changing its order flow, then your range would be here. If price redistributes, then your range keeps expanding, right? You're playing always from your pivots of actual structure, okay? Now, as price, guys, creates structure, it's also going to create structure on the left, right? So this here is your now range from here to here. So you can be buying for a mitigation, especially if that did something like that. You can be buying for a mitigation on a higher time frame for this range. As price changes its order flow, you can be selling for this range. And then if price decides to do this and change direction, then your range becomes from here to here. So then you could look to the left if you want for your confirmation to short, or you just wait for your confirmation to go back long. Now, if price, guys, decides to run this low, then your range becomes from here to here. So to the left, again, it's all about how market structure delivers, because you have to remember, the market is going to deliver these sorts of patterns, right, in a trending market. So the left over here will give you these trades, as we know, and I teach you guys mitigation trades. The right will give you the expansion trades. The left will give you the mitigation trades. And depending on where you are at the left, this can be a really good trade because the left might need to create its higher time frame expansion leg, right? So we have to always flow with the next range that we're working in. And if price has broken out of a specific range, for instance, price, guys, is making inducement and then it breaks out of this range and you're thinking we're shorting now, you're getting trapped by the inducement liquidity right here. Okay, so this is not a short opportunity. It's actually a long opportunity to continue bullish order flow, right? However, if price, guys, makes inducement, then breaks out of that range, you now have bearish order flow. So then you can look for your shorts and your continuations as long as there is room to the next demand zone of a higher time frame. Okay, so we have to create this framework for ourselves about what does this represent on a higher time frame. What do all these moves in here show us on a higher time frame? So if the daily is making this beautiful trend, then internally you're going to have the exact same thing that I just went through on a lower time frame. This is why, guys, a lot of people get tricked up in price action because they have failed to understand fractal markets. They have failed to understand that as price is bullish now, the internal time frames have to go bearish for your mitigation legs. So inside of this price action right here, you're going to have bearish market order flow, right? You're going to have price that actually is bullish, then goes bearish, and now we create inducement, and we keep going, keep going, keep going. Oh, more inducement. But then we finally reach the POI of a flip or an origin, that price then will what? It will then change its order flow. Right? We can get involved now in the next zone. It can get involved now in the next expansion leg. This is where you guys get messed up because you're thinking that every single inducement, A, is a chalk. So that's a fail. You can't do that. Then you're thinking that, oh, we're continually going to go bearish, but you've forgotten that you're only actually in a mitigation leg. You're not part of the expansion. So as price now, if price were to break these zones, then yeah, you can look for a your next zone, right? You can look for your next zone to get run, so we can flow with this being then liquidity and then this being a new demand, right? So we can sell to the demand, we can wait for an accumulation, and in this case, we could buy for what? The supply that caused this expansion leg. You're always trying to catch the mitigation cycles, guys, and it makes price action and it makes trading so much easier because you're just following mitigation cycles. So this trade that I'm currently in live right now is running really nicely, and the mentorship group has these screenshots. I have posted these are all in real time. So this trade right now is running 1 to 5, and this trade now just actually hit BE. Okay, so I got my 6R out of this trade. I have partialed the sell, so I was able to capture on this leg of structure. I secured 4R and I have a runner on this one. right? Because this was a counter. This was counter to my narrative of bullish price action, okay? So I secured 4R and I have a runner. So in terms of this day, right, I had, if we look at this price action, price ended up chopping up a little bit here. So I had a BE, a 0.4R loss, a BE, but this BE, guys, you have to remember, this BE went 1 to 3.3. But that doesn't meet my rule specifically because I believe that this high was weak, okay? So got into another reaccumulate. Now this trade actually was here, not over there. Got into this trade and we hit my target, and this target was here. Now obviously I wanted this to go way higher, but this is why we partial and we manage our positions, okay? So this trade I actually entered right here, and it's running 4R. So we've gotten 10R for the day with a couple small losses and 2 BEs, all while flowing with the higher time frame cycle. Why? Because this higher time frame cycle was bullish. But look what's taking place, guys. We are creating inducement liquidity, right? We have not mitigated the origin. This was the origin of this actual higher time frame expansion, right? Pullback, expansion. That's your higher time frame. If you want to flow with the internal structure, then you can look at all of these being order blocks, right? This is a sell to buy that I taught you guys in the last YouTube video. These are your origins. So you could have flowed with the higher time frame, and these still would have been powerful moves, right? That's a 3 pip stop or a 2.7 pip stop loss. Whoop, let me clean that up. Sorry about that. So if we go right here, that's about a 3 pip stop loss, right? And you still got a 1 to 5. Amazing R trade. Same with this one. As price came back down to you, you wait for the accumulation, 3 pip stop. You got another 1 to 5. So there was 10R in that leg of structure and more if you actually flowed with the lower time frame. Now, when I got into these trades last night, you have to remember it's the same thing, folks. It's the same thing. So we have our continuation to the downside. Okay, this is a redistribution, right? Redistribution, and we have an unmitigated area that sponsored the change of order flow. You have to remember, we went bullish, then we went bearish, and then we mitigated, and we never mitigated this zone. So we went bullish, we went bearish, and we broke out of structure. So we have a failure of mitigation right here, okay? Price came into it. I missed this sell, got the buy. I felt like we were at the low. I can explain that one later. We had a flip zone here, and I got into the continuation buy for a 1 to 6. Price came back down for what, folks? For what? The origin accumulation. Pretty simple. Pretty simple. So as it comes back down to this zone, I'm just waiting for my confirmation to continue in the bullish order flow of the higher time frame, right? So we break out of this structure, we retest the flip, as I have taught you guys on the YouTube channel. There's a flip, here's your origin, got into that trade, and what do? We hit another 1 to 10 on this expansion leg. Now, I forgot to leave my runner a little higher, so unfortunately this trade ended up closing out 1 to 10. Because I was looking for this overall zone to get mitigated, because that's the origin of the last pullback. So this is your higher time frame supply zone. Pretty simple, okay? So let's look at what is taking place. So we have now come down for a mitigation. We got into a buy. This sell is coming from a higher time frame expansion leg. Therefore, we can look to short for what? The left behind origins or the demand zones down here, because this is actually creating, folks, internal inducement, right? It's creating internal inducement. This was all described in the mentorship group this morning. I said to the group that this zone will hold, or we're going to come down to the origin demand zone of this overall change and a flip. So this demand is a higher time frame flip zone that was responsible for the change of order flow, right? We were bearish, then we went bullish. So we have an expansion leg and a continuation potentially, but we can sell the mitigation when you guys learn how to flow with what price is delivering. Price was bearish, mitigation, inducement, mitigation, right? This is how price delivers every single day. It's not that difficult, but you have to learn the models. You have to understand what I'm teaching you from a fractal nature of price. So when you start to look at this on the 15-minute time frames, you can start to see we came into the origin, we mitigated the change of order flow here, right? We were bullish for a mitigation. We retested, we went back bullish only to mitigate, rebroke structure. Oh, what did we do? We failed to mitigate the overall supply zone, right? The overall supply zone. Price comes back up. We have another expansion leg. This is all a mitigation leg of structure. This is all mitigation. We have now what? A potential change of character, right? We've broken out of this zone. So now we have this and we have a potential new expansion to run the lows or only to the demand. Because right now, folks, we are caught in between this type of higher time frame order flow and this internal order flow. Fractal markets have to be learned. You have to learn how this works. If you can't see fractal markets, I'm sorry, you're going to have a difficult time trading. Now, if you want to keep it simple, then you could just choose a time frame and say, okay, well, we made a higher high here after this high, so I'm going to buy for another higher high, right? That's all you have to do. Or you could say, oh, we made a lower low, then I'm going to wait for a lower low, and you could sell the lower low. It's as simple as that, really. Trading is literally as simple as that. It's just people get so confused because, oh, hey, this breaks, and they just don't understand that price is in a higher time frame supply zone. This whole thing is supply on like a daily, right? So if we go to the daily, what do I teach you guys? The buy to sell is all supply. So we right now are stuck inside of this supply zone, but look, we're also stuck inside this demand zone. That's why we were buying there, because we are in demand that then changed the market order flow, right? We broke out of this last high. So we're in a flip zone that's unmitigated because this candle here did not have a wick down. If that would have printed like a massive wick, right, then that would be mitigated. But it's not. It's not mitigated. It's clearly in balance that needs to be then rebalanced in the Forex market. All right? So you get to make these decisions for yourself, and you can choose the time frame, guys, that allows you to think properly. You don't have to go to the second time frames. You can just stay on the 15-minute and trade 15-minute structure, right? It doesn't matter. I've taught you guys about OFCs. So if you're inside of a good zone, and look what you have, 15-minute OFC. We broke the previous candle's high. Okay, so we're going bullish, right? In terms of this overall price action, we held order flow because price, even though this one swept the high, it closed bearish. So then we expect the next high to hold, next high to hold, next high to hold. Oh, next high didn't hold. Okay, so we're maybe switching because we're in an origin. It's very simple, guys. When you take what I teach you guys on here on the free YouTube channel for your pleasure, there is so much value here if you can just learn to put the pieces together, right? We came into supply. What do we have? Holding block flow, holding block flow. Oh, wait, we have our first OFC. Then what takes place? Boom, down to the downside, right? Same here. What do we have? Holding block flow, holding block flow. Oh, we have our first OFC. Down to the downside, right? This is how the Forex market will start to warn you of changes, right? Changing in structure, right? So it doesn't mean you're not going to take losses. You're definitely going to take losses, guys, as you learn this journey. But you can actually just formulate your bias based on the higher time frame structure. Higher time frame structure with mitigations, okay? So we're going to keep going, guys, over the next few weeks here. I'm going to dive into more of your questions. I'm going to create shorter YouTube videos for them. They're not going to be long 45-minute YouTubes. I'm going to address the question, and if there's more questions, feel free to join the free Discord, guys. You can ask questions in the free Discord and learn with the group that's in there for free, right? Feel free. So yeah, I hope this video is helpful for that specific question, guys, because learning to flow with mitigation, it will be, like I've said so many times on this YouTube, it's a powerful tool in your tool belt for you to understand how you can get involved in these trades once you learn order flow delivery. Okay, once you learn order flow delivery, and that is what I am teaching you guys over and over and over on this channel. All right, guys, so we'll see you in the next one, and have a great week.